Hi, it's Charlie giving you Monday's market commentary. I hope you're very well. Before I go into the commentary, I just wanted to actually dissect Friday's trade because if you watched the live trade on Friday, obviously got stopped out in the end. But the interesting thing with Friday's trade is obviously ultimately it paid out. It played out. So was there something wrong with the stop placement? And that's the sort of thing that you have to look at. So when you're reviewing your trades, you get either we get stopped out or it's a winning trade. It's always good to do a brief review just to check if you executed correctly, because you could go through a phase where you're finding you're putting your stop in the wrong place, and you're getting stopped out unnecessarily. So if I go back to Fridays, this is the hourly chart, remember, and we had this nice sort of inverted head and shoulders in play, and I had that target up at the 4 hourly 50. And remember, it came down here on this sort of flush move, really flushed me out. I had my stops below. Where did I have the stops? I can't remember now. Down here, wasn't it? Yeah, at the lows. It's taken those out and then come all the way back up, and then proceeded to then go up and hit that 4 hour 50, which is up here. So, was there something I could have done? In fact, I don't think there is. I think that sometimes you have to just to say, oh, it's just a volatility move. That's all it was. Volatility expanded. It came all the way down, took out these lows, and then came all the way back up. Because then at what point I still had to remember the couple of positions left over because I did have a couple of positions with slightly wider stops on. So, but what you have to do is say, okay, make a mental note of it. And because markets go through different phases, and if all of a sudden you find that you're getting stopped out more regularly on your trades, but your overall analysis is correct, like in this one, then you have to then assess whether you want to change your stop placement and where you're actually going to be, and widen your stop placements. And it may mean you have to then take slightly smaller position size in order to accommodate a slightly larger stop to allow for volatility. Because if all of a sudden volatility was to be picking up, then you would find that markets will do these sort of flush moves easier, and then come back up in your direction. So certainly a nice, that's why I wanted to just cover this off, just to say, look, if you're trading, always review your trades anyway, and also, if you find that you're getting stopped out regularly, but your analysis is correct, then either you've got to look at your execution, where you actually enter the trade in the first place. Maybe that could be slightly better. Or if that is okay, your execution, you just find it's volatility that's happening, where you get a volatility stop, then look at potentially widening your stops but with a smaller position size. But then you have to look at making sure your risk to reward is still going to be okay, but certainly it's something to look at. Also, the third and final option is to say, okay, I'm still going to have a tight, the normal stop loss, but if I see that price stops me out and then comes back in, then I've got to be willing to go back into that trade and go back in again. So that's the final option. So different things, food for thought there. I thought I'd just cover that off. Right, okie dokie. Let's go into these markets. So we've got the euro here. It's just sort of sitting around down the lows. Not really too much to say about it. Obviously, trend very much down. Yeah, it's oversold. Same old story really with the euro at the moment. So let's see if there's anything else that's maybe a bit more interesting. And I think for this week ahead, obviously, it's all about the pound. So you can see this old trend channel which was in place on the pound back from through July and August, and the pound's obviously had a nice bounce off the lows it made down here, sub 161. Obviously, if we do get if we get a no vote, then we should expect the pound to have a pretty decent rally. I think the fundamentals are out of sync with the sentiment at the moment, and so if we do get that rally, it could be pretty good. So what do you do? Well, going into Thursday, if the pound starts to dip going into the latter part of next week, it could just be the sign that to then put buy stop orders in place above. So if we dip down, put buy stop orders in place, and then whatever you do, if you're going to trade it, trade with smaller position sizes, because the volatility will be very big. So you need to trade with small position sizes and wide stops. but I think that we're out of sync with the fundamentals. Obviously, if we got a shock yes vote, then we could be down at 150 before we know it. So that's just how it could be. So we won't know where we are from a price perspective until we get obviously into Thursday, and then it's a case of then looking at where to put orders and things like that. I'm away Friday, so I can't really trade it anyway, but I may look at putting some orders in. So I know it's very, very close between yes and no votes, but we'll just have to see which way it's going to go. If it's a no vote, then we could see a huge move down. So sorry, if it's a yes vote, it could be a huge no move down. If it's a no vote, then we should see a decent rally back up. So I think that's the big news story for this week. I know Kim on this video has also done the calendar of events, which are the key news announcements for this week as well. We've got some decent news out this week as well. So I think that's going to be the big story. I'm going to leave this video nice and short and sweet this week, and hopefully you have a good week. Downsize your position size, widen your stops, good luck, and we'll see how you get on next week.